credit or debit? You probably asked this question dozens of times. But here's what nobody tells you. This split-second decision could be the difference between financial protection and financial risk, between building wealth and leaving thousands of dollars on the table, between sleeping peacefully at night and watching a fraudster drain your bank account to zero while you're powerless to stop it. This is MindSnack Finance, bite-sized lessons with lasting value. Let's be honest, cash is rarely used these days. When's the last time you actually paid for something with physical bills? Electronic payments have completely taken over, and that's not changing. The question isn't whether to go digital. The question is which digital payment method you choose. And here's where many people get it wrong because they think credit cards and debit cards are basically the same. Two pieces of plastic that let you buy stuff. They couldn't be more wrong. One is a financial fortress built around your money. The other is like walking around with your bank account wide open, a giant target on your back hoping nobody notices. Today, we're going to break down the truth about credit versus debit. The real version. The one that could save you from financial disaster or unlock thousands in benefits you probably didn't even know existed. Let's get into it. Before we talk about fraud protection or rewards, you need to understand the fundamental difference between these two payment methods, because everything else flows from this. When you swipe a debit card, you're spending your own money directly from your bank account. The transaction pulls funds immediately from your checking account. That's your cash, your actual dollars. The money you worked for, that you deposited, that you need to pay your rent and buy groceries. It's right there in your account, and you're giving direct access to it every time you swipe. When you swipe a credit card, you're borrowing the bank's money. The bank pays the merchant, and you get a statement at the end of the month. Your actual cash never moves. It stays safely in your bank account until you choose to pay your credit card balance. This distinction sounds simple, but it changes everything. Because when something goes wrong, and eventually something always goes wrong, whose money is at risk determines how protected you are. With debit, it's your money on the line. When that money disappears, you're immediately in crisis mode. With credit, it's the bank's money on the line. They have a vested interest in protecting it. They have teams of fraud analysts, sophisticated detection systems, and legal departments built for this. And when fraud happens, you're insulated because your actual cash never moved. This is the foundation. Everything else we talk about today builds on this distinction. Keep it in mind. Now let's talk about the nightmare that should concern you if you use a debit card. Fraud. Picture this scenario. It's Tuesday morning. You're grabbing coffee before work. You open your banking app to check your balance. Yesterday, you had $3,000 in your checking account. Today, you have $0, zero, nothing. Panic sets in. You check the transaction history. Someone got your debit card information and cleaned you out while you were sleeping. With a debit card, that's your actual money. Gone. You can't pay your rent. You can't buy groceries. You can't put gas in your car. You're suddenly stranded in your own financial life while the bank investigates. And that investigation, it can take days. You're filing disputes, gathering documentation, waiting for provisional credits, hoping the bank sides with you. And here's what banks don't advertise. While federal law caps your liability for unauthorized debit card transactions at $50 if you report within 2 business days, that doesn't mean you get your money back immediately. You're still waiting. Still unable to access funds. Still financially paralyzed. If you report after 2 days, but within 60 days, your liability jumps to $500. After 60 days, unlimited liability. You could lose everything. Now, let's replay that same scenario with a credit card. You check your credit card statement. There are fraudulent charges. Your actual bank account? Untouched. Your money is exactly where it was. The fraudster stole the bank's money, not yours. You report the fraud with a phone call or a few clicks in the app. The charges are immediately removed. They issue a new card. Life continues without interruption. Zero liability protection means you pay nothing, not even the first dollar of fraudulent charges. This is standard across all major credit cards, and your actual cash never moved, so there's nothing to wait for, nothing to dispute for survival, no financial emergency while you sort it out. This alone, this single feature, is your financial shield. Because fraud isn't a matter of if, it's a matter of when. Data breaches happen constantly. Card skimmers are everywhere. Phishing scams are increasingly sophisticated. Your card information will eventually be compromised. The only question is whether it's your money or the bank's money when it happens. But fraud protection and zero liability protection are just the beginning. Here's what most people don't realize. Credit cards come with a fortress of protections that go way beyond fraud. These are benefits that probably you didn't even know you had built right into your card. Let's check it out. Purchase protection. Remember that laptop you bought last month that mysteriously died? With a debit card, you're dealing with the manufacturer's warranty. With a credit card, purchase protection steps in. Most cards will replace, repair, or refund items that break, get stolen, or arrive damaged within 90 to 120 days of purchase. That's thousands in potential coverage on every purchase you make. Extended warranty protection. Your credit card automatically doubles most manufacturer warranties, usually up to an additional year. That 2-year laptop warranty becomes 3 years. That 1-year warranty on your new TV becomes 2 years. Free of charge. No registration required, it just happens. How much is that worth over a lifetime of purchases? Thousands, easily. Return protection. Try to return something and the store says no? Many credit cards will refund you anyway, up to certain limits. The store doesn't even need to agree, the card company handles it. Travel insurance. This is where it gets really interesting. Planning a vacation? Your credit card likely includes trip cancellation and interruption insurance covering thousands in non-refundable expenses. Travel accident insurance, lost or delayed baggage reimbursement, travel emergency assistance services, medical emergency coverage abroad, rental car insurance that can save you up to $30 per day in fees. Add it all up, purchase protection, extended warranties, travel coverage, return protection, and you're looking at tens of thousands of dollars in insurance value built into your credit card. Insurance that activates automatically just by using the card for purchases. A debit card gives you none of this. Zero. You pay the same prices, take all the same risks, but get zero protection beyond the basic transaction. It's not even close. And we haven't even talked about rewards yet. Because honestly, the rewards are just the cherry on top. But they're a pretty sweet cherry. Cashback programs give you 1% to 5% back on purchases you were making anyway. Groceries, gas, restaurants, utilities, everything. If you spend $30,000 a year on a credit card, which is reasonable for someone covering most expenses, and average 2% cashback, that's $600 back in your pocket annually. Every year. For doing nothing different except choosing credit over debit. Travel rewards can be even more lucrative. Points and miles that translate to flights, hotels, and experiences. People take entire vacations essentially for free by strategically using credit card rewards, not by spending extra, by routing their normal expenses through the right cards. Sign-up bonuses alone can be worth $500 to $1,000 or more when you open a new card and meet the minimum spending requirement. If you were going to spend that money anyway, you just earned a huge bonus for doing so. Meanwhile, the debit card user gets none of this. They're paying the same prices at the same stores but receiving exactly zero rewards, zero cashback, 0 points, 0 bonuses. They're paying full price while credit card users are rewards on everything. But here's where I need to be brutally honest with you. Credit cards are not for everybody. They're like power tools. In skilled hands, they're incredibly useful. In the wrong hands, they're dangerous. And unfortunately, credit cards lead millions of people into overspending, debt, and financial nightmare every single year. Not because credit cards are evil, but because not everyone has the financial discipline required. Some people see their credit limit as extra income. They have a $5,000 limit and think, great, I have $5,000 to spend. Wrong. That's not your money. That's a loan you'll have to repay. Others use credit cards to handle emergencies they should have saved for. Car breaks down, throw it on the card. Medical bill arrives, throw it on the card. These aren't strategic uses of credit. These are patches covering a broken financial foundation. Both approaches lead to the same place, a debt spiral that can take years to escape. Credit card interest rates average 20% to 25% APR. At those rates, a $5,000 balance can take over a decade to pay off if you're only making minimum payments, and you'll pay thousands in interest. Using credit cards successfully requires financial discipline, the kind where you treat the credit card as what it really is, a powerful payment method tied to your actual income, not a way to live beyond your means. So, how do you harness the power without falling into the trap? Three non-negotiable rules that separate the winners from the losers. Rule number one, pay your balance in full every month. Not the minimum payment, not most of it, every single dollar. If you can't do this consistently, you're not ready for a credit card. The moment you carry a balance, interest charges will devour any rewards you're earning and then some. That 2% cashback becomes meaningless when you're paying 22% APR on a balance. You're going backwards. Paying in full means treating your credit card like a debit card with benefits. If the money isn't in your checking account to pay off the purchase, you don't make the purchase. Period. Rule number two, never spend beyond your means. Your credit limit is not your spending limit. Your income is. Just because you can buy something with credit doesn't mean you should. If you wouldn't buy it with cash from your checking account right now, don't buy it with credit. Credit cards should root your existing spending, not enable new spending. This is the discipline test. Can you walk past something you want because you can't afford it, even though your credit card could technically cover it? If the answer is no, you're not ready. Rule number three, have an emergency fund before you get serious about credit cards. This is your insurance policy. 3 to 6 months of expenses in a high-yield savings account. When life throws you a curveball, and it will, you reach for savings, not credit. An emergency fund means emergencies stay emergencies instead of becoming debt spirals. If you don't have an emergency fund, build that first. Credit cards should enhance a stable financial situation, not prop up an unstable one. Now, if you're wondering whether you can use your credit card for an emergency and then pay it off with your emergency fund, the answer is absolutely. Since you have the funds set aside, it makes sense to use your credit card and then reimburse it. Follow these 3 rules and you will never get into credit card trouble. You'll enjoy all the benefits, all the protection, all the rewards with none of the downside. Break even one of these rules consistently, and you're playing with fire. So, credit or debit? If you have the discipline and be honest with yourself about this, credit cards are objectively superior. Better fraud protection, comprehensive purchase protections, rewards on every dollar, insurance on your travels, extensions on your warranties. They're not even playing the same game. Debit cards leave you vulnerable, unprotected, and unrewarded. They're a necessary tool for specific situations, but they shouldn't be your primary payment method if you can handle credit responsibly. But if you can't follow those 3 rules, if you'll carry balances and pay interest, if you'll overspend because it feels painless, then debit is the safer choice. There's no shame in that. Knowing your limits is smart financial management. The worst thing you can do is lie to yourself. Don't convince yourself you have discipline you don't actually have. Don't chase rewards into debt. Don't build a fortress of protection on a foundation of overspending. But if you can handle it, if you can treat credit like the powerful tool it is, then credit cards become your financial superpower. Protection, rewards, and peace of mind, all wrapped into one piece of plastic. The choice is yours. Just make sure it's an informed one. Because now you know the truth.